Hey everyone, welcome back to Squawk. In this video, we're going to be covering future outlook for the fiscal year of 2022. We're going to be covering different sectors, talk about different industries. Specifically, we're going to cover all the interesting actions in Bitcoin. So with that being said, let's turn our attention to the chart. Right in front of me, I have the S&P 500 index fund. And right now we are almost near all-time high again. Here, all-time high, it's about 480. Let's put a horizontal line. And that's going to be the first reference point we're going to be looking at. We came back down here past couple of days. Seems like we're jumping back up. I think there's a very high chance we're just going to be breaking this and going for all-time high again for the first quarter. The first quarter, I'm not looking at a whole lot. Specifically, we're talking about maybe perhaps 500. If we can hit there, I'll say the first quarter is pretty good. That being said, the downside is of course definitely possible. The first reference point I'll be looking at is 480. Let's put a trend line. That's going to be the first reference point. If it breaches that, I will say the next reference point to look for is 430. And that will be a rather big reference point. Me personally, I think the chances of going to 500 is definitely much higher than going to 430. So just from a chart level, you do not have to worry about another crisis coming. Disregard whatever news you read online. That being said, that's the first thing to notice. It's a little bit of a micro trend line. We're looking at a couple of days in the past, all the way to October, so it's not a macro trend line. If you want to look at macro trend line, we really need a different chart. We can look at weekly chart or even look at the monthly chart. You can see that's going to be the trend, right? This dip here, that's the financial crisis. Let's put a horizontal line. We came a long way, right? We came a long way. You do not have to worry about financial crisis. I know this chart is going up extremely high. It's almost like a straight line from that we have here. That's 240. That's going to be essentially during middle of pandemic. We came out of pandemic, just even like a V bottom. We shoot straight up all the way to 480. And this is probably the strongest market that you're ever going to see. And it's the strongest market I've ever seen. And perhaps in the history of financial markets. So, if you're going to toss a coin, put on a happy face, okay? The odds are with you. If you're gonna put on a sad face, the odds are against you, So these are a couple of the important things to point out. What I would expect is an environment such as 2018 or perhaps even a little bit of 2015. Me personally, just from a healthy chart perspective, I want to see something like 2015 or 2017 going on where, we shoot straight up and we have a couple of months of just flattening out. So let's look at weekly chart. What that means is you can clearly see that this momentum going up all the way to 480 has slowly died down. You can confirm that with RSI, right? It's coming up here, it's starting to flatten out a little bit. So when the relative strength index is starting to flatten out, especially from what we've seen in the past couple of months, what that means is the momentum is starting to die down. Because alternatively, if these things keep going up higher, it should shoot up to 72 or even 76. But that's not what's happening here. What's happening here is this thing start to flatten out. So the momentum's definitely start to die down. So with that being said, I would not recommend people to just jump in huge positions in this market as of right now. So me, myself, we're going to hands off in the Q1 for equity market. And that's going to be the principal practice for us to follow. I'm not seeing a good buying point in S&P 500. Not right now. Considering that we entered during the COVID, specifically in March and April of 2020, that is a buy spot for us and we bought there. And if you bought at 240, we're not going to go again and buy at 480. So with that being said, that's going to be the equity market. In terms of European market, we can take a look at FEZ. That is the ETF index tracking Euro Stoxx 50 index. And in the past couple of days, you can kind of call this a bull flag. Let's put a trend line. I know a couple of friends on trading floor, they like to see something like this happen. That's a body of the flag, and the potential projection is essentially another jump from here. So really we're looking at something like a 55. Let's put a horizontal line. That's going to be kind of the situation we're shooting for. Again, this is just all from chart reading. There's no guarantee that this will actually happen. On the downside, I'll be looking at 40. That's going to be the first trend line I'll be looking for. If it breaches this 40, hopefully there's a buy spot there. But if not, I'll probably be referring to 26. Then that's going to be a rather big drop. Now, I'm not saying the entire European market is just going to drop from 46 all the way to 25. That's almost like a 50% drop. That's not what I'm saying. What I'm saying, it's a reference point to indicate what is a good buy spot. The chances of getting there is of course very low, which also indicates that I will hands off the European market for now. The overall long trend for European market, I think it's not as strong as that in the United States, especially they're still recovering from financial crisis, right? The hype of the point in financial crisis back in 2007, it's 65. Let's put a horizontal line all the way to the bottom, that's about 25. Really, they're just in within this range and going up and down for the past 10-20 years. So I'm not really looking at a whole lot of development. I think this potential bull flag could be interesting. If we can hit 56, that will put Europe at a much better position. Then we can talk about 65, which is all-time high. I hope to the best for the European market, for European friends. I hope we can get there. Let's see how things go. Another interesting market is cryptocurrency, of which I'm involved in Bitcoin myself. I think this is going to be an interesting price action for the past couple of months. Specifically, me personally was heavily involved in this market. When I say heavy, I'm not talking about 90% of my portfolio. I'm talking about 5 to 6% of my portfolio. That is labeled heavy just based on our research. Of course, everybody has their own research. I'm not saying that's heavy for you. Depending on your own size, depending on your own portfolio, you should put that label on by yourself. So, as I said, 5 to 6%, that's considered a heavy position for us. We're really looking at this price action all the way since November. When we hit a little bit of a high here, I believe that's all-time high for Bitcoin. As you can see, the hype from April 2021 is about 65,000. So let's put a horizontal line. Here we breached up a little bit, right? Well, we went all the way to here to 67,000. The high of this bar is like 69,000. So you kind of say that this is already trying to breach $70,000, which of course you can call it a bubble. I just want to clarify this. In terms of fundamental research, I do not believe Bitcoin has intrinsic value. It is not by all means an investment. It is more like a hedge. It's more like a speculation. So I just want to lay that out there. Definition wise, I think we should all just get it straight so that we can keep our conversation on the same page. Now, in regarding to that, since it does not have intrinsic value, we should really be looking at the volatility. We should be really looking at a chart. We should really be looking at some of the empirical evidence of what constitutes a trade, what constitutes a good buy. These will be the factors that we'll be looking at. These will be the factors that we'll be investigating. And this day with a huge tail, let's put a vertical line. On December 4th, it really just reminds me of back in May 2021, this tail down here, let's put a vertical line. It really reminds me of that. So I think there's a good chance that we're going to get some sort of mimicking price action going on, in the sense that we're going to see the bottom real soon. I don't know if it's a U bottom or a V bottom. If it's a V bottom, potentially it could go like that. If it's a U bottom, maybe we're going to go something like this, flatten out a little bit, and then we're going to go back up. So it really depends on how long this correction is going on. And again, this is a currency, right? It is not a stock. It does not have tangible value. So what that means is we'll be trading this off US dollars. Which then we also need to take a look at the interest rate, take a look at the GDP, take a look at the debt level of this country, the revenue of this country, which is some shocking number. Because if you think about it, right, 330 million US citizens, average salary is what, $50,000. You multiply those two numbers together, I'll let you do the math. It's going to be some giant number. And on average, how much 401k plan do we contribute on a monthly basis? 10%, 11%. Right? Sometimes company will match it. So what that means is total population times average salary, and then you multiply a 10% or 11%. How big of a number is that, right? I don't know. You do the math and you tell me. That is going to be the buying power of the equity market. So I think there's a huge buying power there and not a whole lot of selling power in US market right now. Anybody that is trying to short sell the market is going to get squeezed out, which is why if you look at the S&P 500, the monthly chart, we get this huge uptrend look like that. It's just all short squeeze. Again and again and again, people trying to take opposite direction of the trade, they all get squeezed out in the end. That is largely affected by essentially how 401k plan is constructed and where the buying power is coming from. And I think that principle still applies here. Now, by all means, I'm not saying that's the only contributing factor. I think it's one of the biggest contributing factor in our market right now. So back to Bitcoin, I think something here is definitely interesting. We already tested 40,000, okay, and it seems like it's gonna hold. I hope it holds. I definitely add somewhere here. I think I started adding on this day. Let's put a vertical line. I start adding the past few days. Let's put a small reference point. So I hope that's a bottom. And I'm not scared to say that because I know probability is with me. So it is completely okay to say that if this thing goes wrong, I'll have other ways of hedging the risk. So no problem there. And I try to keep my position within a reasonable amount of volatility. So with that being said, I think crypto market is still interesting. I think there's a buy opportunity here. You do not have to be heavy at all. You should probably keep around 2 to 3% just to hold that little bit of extra cryptocurrency. Now, some people also ask me, is it at all valuable to go for the other cryptocurrencies? Me personally, I like to be involved with the big guys. I think in crypto market, Bitcoin is still holding the largest market share. And this is coming from asset pricing. In asset pricing, market capitalization is one important factor to follow. If your question is to create a filter to pick certain asset classes based on market capitalization, the asset pricing theory suggests that you go with the big guys. You go with the product, you go with the equity class with the largest market share. Now, I'm not saying they're always right. I'm saying there's empirical evidence to support that, and that's what I'm going for. If you want to invest in asset classes with small market capitalization, with smaller market shares, that's completely okay. Just please watch that risk. You're dealing with something that comes from a different risk profile. Ethereum, we're talking about different volatility. Litecoin, we're talking about different volatility. You should definitely do your research before you just jump in those different asset classes. So with that being said, hope you enjoyed this episode. I think it's a whole lot of actions going on within this global uptrend in United States equity market, and we shall see what's going on.